So we have finished the first problem. Now we'll move on to the second problem in final accounts adjustments. So here are the details given. So in this problem, given below are the balances of Pandian as on 31st March 2016. So capital they have given, sundry debtors and creditors, sales, machinery, cash in hand, cash at bank, wages, purchases, opening stock, property, bills receivable, administration expenses, sales expenses, and goodwill. Okay, so they have the adjustments here. The stock value at the end of the accounting period was 5,000, so that's a closing stock. Then they have write off bad debits amounting to rupees 2,000, so that we have to deduct it from the debtors. Create provision for bad and doubtful debts on debtors at 10%. So we have to again create a provision, okay, for debtors. Depreciate machinery at 20%. So these are the adjustments here. It's like few adjustments only are here. So we'll start. So wherever there's an adjustment, we'll just like mark it as bold, okay, in these items. So we'll mark opening stock because closing stock is there. We'll mark debtors. We have two adjustments there. On machinery we have one, and on, I think that's it. Okay, we have only like 3 adjustments here. So we'll start from here. Capital is like 1,20,000. And debtors is 22,500. So we can show debtors here. Okay, so debtors, we'll put the value. The debtors value is 22,000, and we have an adjustment. So adjustment we'll see later. And we have creditors of 22,500. So creditors would be, creditors are here. Creditors are 22,500. Sales is 59,700. So we'll take it as revenue. Machinery is 2,000, and we have a depreciation for it. So machinery, we'll take it here. So machinery we have 2,000. And we have a depreciation there. So depreciation is 10%, 20%. Okay, so 20% of 2,000 would be 400. So the balance 1,600. The balance 1,600 should be shown in the asset value. So we can take the machine. And we can use it there. So next is cash in hand and cash in bank. So we have cash here. So cash and bank, both we will put, or so we'll just copy this both, cash in hand and cash at bank, and the value are so next we have wages. So wages, we don't have any adjustment, so we can take it to the cost of sales. So we can take it as 2,500. So next is purchases. Purchases is 10,000. Next is opening stock. We have 30,000. So as we have opening stock, we'll also use the closing stock now. So closing stock value would be 5,000. And we should also show the closing stock in the SOFP. and we have property, so that is 60,000. We have bills receivable 14,500. Then we have administration expense 3,500. And finally we have sales expense 9,000. And goodwill is 10,500. So we have an intangible here, so we can mark it as goodwill. So if we see here, we have twice we have taken the closing stock, okay, one in cost of sales and the other one in inventory value. And we have yet to take write-off and provision. We have also already done depreciation, but depreciation only once we have done. So we have taken minus 400 here. We have not taken the depreciation to the SOPL. So depreciation, we'll put it in administrative expense. Okay, we'll add depreciation there. So we'll take it as 3,500. And depreciation is 400. We have two more entries. One is write off bad debits amounting to 2,000. So bad debits, first we'll write it off. So we have it here. Okay, so better we will take it as a working note. We will take this as a working note and we'll do it. Okay. So we have set the table. So we'll start with the entry. So the entry is write off bad debits amounting to rupees 2,000. So first we'll write it off. Less bad debts. So 2,000 we will deduct. Okay, so we have to show this in another expense. So we'll show it in cost of sales expense. Okay, we'll show it as cost of sales expense. So we had a bad debits here. So if any item comes as a adjustment, it has to come in two places. So the next one is create a provision for bad and doubtful debtors, okay, for at 10%. So we have to create an allowance allowance or provision for bad debts, we'll put it as BD. Okay, so he says 10%. So 10% of what? Of this balance. Okay, on 20,000 we have to provide a 10%, so that becomes another 2,000. Okay, so we'll, if you want, we'll just mark it as 10%. Okay, so that comes to 2,000. So the balance amount would be 18,000. So there's already receivables available. So the total of this account would be 32,500. Okay, so that's done. And we have to show the allowance. So the allowance we have not taken still. We have to take the allowance and we have to show it in cost of sales. Okay, so with this we don't have any other accounts. Okay, so we could actually close all the accounts here. So first we'll try to close the cost of sales account. Okay, so the cost of sales account comes to 41,500. So I'll put it here. And the debtors and other receivables account comes to 32,500. So that we'll take and we'll put it here. We don't need this part because we have still created a working note. Okay, so our sum is over and we have like posted all the numbers and our balance sheet has also tallied. Okay, so we have got 5,300 as our profit. So that profit is pulled to the reserve part. Okay, and we have done all the adjustments also. So with that our sum is over 1,47,800. So that's about this sum. We'll move on to the next one. So this is a little bit lengthier sum, okay, and a little bit complex sum. So we'll try to do this one, and there are like around some 5 adjustments here or 6 adjustments are here, okay. And as per requirement, we'll also create some working notes and we'll do it. So this would be a last sum in our final accounts adjustment problems. So we'll start. First, what we'll do, we'll see what are the items here. Then we'll read the adjustments, and then we'll mark the relevant item, trial balance item here, so that we can remember which items are affected by the adjustments, and finally we can work out the problem. So this question gives us Philippa Page prints and publishes study materials. She prepared the following trial balance as at 30th June 2007. So purchases there, opening stock, sales, distribution cost, administration and selling expenses there, trade receivables, irrecoverable debts, bank balance, capital account. Okay, So capital account, I think it's equity capital account. At 1st July 2006, they have mentioned, I think that's the opening number. Then they say that they have a discount received, bank loan, non-current asset at carrying value, that is book value, capital introduced in the year. So we have to add this number and this number together. And then they have loan interest paid. They have drawings. So we have to add capital account plus capital introduction minus drawings. We'll get the total capital account. So this we need a working note. And then trade payables, wages and suspense. Okay, so suspense, they have told us that 8,000 rupees is suspense in credit. Okay, so suspense in credit refers to, it can be a liability, okay, or it can be an income, or it can be a profit. Okay, we don't know which of this one is. So only when we read the only when we read the adjustments, we will know what it is. The following is to be taken into account. Prepare the SOPL for the year ended 30th June 2007 together with the SOFP on behalf of Philippa Page. So first one is inventory valuation at 12,000. So as inventory, we'll mark the opening inventory. Okay, we have an adjustment there. Philippa decided to write off an irrecoverable debt of 1,000. This should be accounted as an administrative and selling expense. So as there's a irrecoverable debt, we'll mark it in trade receivables. The wage cost should be split equally between cost of sales and administrating and selling expense. So wage should be split equally between two accounts, they say. Then bank loan was taken out on 1st July 2006. So that is like exactly 1 year before. And they have to pay 6% as loan. Okay, 6% loan. So we have to see what is the loan interest. So that also we have to compute. So two areas we have to compute there. Then the depreciation charge for the year of 5,000 on property, plant and equipment has not been accounted for. This should go to cost of sales. So PPE, so property, plant and equipment is there. Property, plant and equipment is here, non-current assets. So we can take that. Sorry. We can take that. Next one is, or the last one is, the balance on the suspense account, okay, represents the proceeds from the disposal of an item of property, plant and equipment. Okay, so that seems to be an income. Okay, so it's neither a liability, okay, nor a profit. It is an income. Okay, so it is an income from sale of property, plant and equipment. Okay, so that's about that item. At the date of disposal, that item had a carrying cost of 10,000. At the time of selling, it was worth 10,000, but they sold it for 8,000. Okay, so that is the income. That's not the gain. That's the income here. So they have sold 10,000 worth of good for 8,000. So they would be incurring a loss. The gain or loss on disposal should be accounted as a cost of sale. Okay, so that is again a cost of sale item. So that's about the concepts here. Okay, our job is to pretty much from here on just to post all the items and get the answer. So we'll start. So we'll start. Purchase. Okay, purchase is 60,000. So we'll put it in cost of sales. Okay, Next is inventory. Opening inventory is 10,000. When putting opening inventory, we'll also put the closing inventory, which is worth 12,000. The same closing inventory should also be shown on the asset side. So 12,000. And then we have sales. Sales is 1,20,000. Then we have distribution cost, which is 13,200. Okay, so this sum is like differently telling that distribution cost and administration cost. So first we'll take administration cost. We'll put it here. It's 5,600. And distribution cost is 13,200. Okay, so we have done till that. So we'll start from trade receivables. So for trade receivables, I think we have to start with a working note. So we'll just like take the details for trade receivables. We have to do a working note. Okay, in the last problem I think we did a working note, so we'll copy that. Okay, so irrecoverable debts. Okay, sorry, irrecoverable debts is there. So irrecoverable debts is nothing but bad debts. Okay, so bad debts of 1,000 should be written off. There's already a bad debt of 1,550. Okay, so this should be shown only in one place. So this should be shown only in the P&L. So where in P&L it should be shown? It should be shown under the heading administrative and selling expense. So we have to take this. Again, we have another working note. So we'll first take administration selling expense here. First we'll post it, then we'll see. Okay, so now if you see, we have irrecoverable debts. First we'll solve that. So this has to go to administration and selling expense. So first we'll put that. Then we'll go to the adjustment now. So this is the adjustment. It says write off, decided to write off an irrecoverable debt of 1,000. This should be accounted as an administrative and selling expense. Okay, so this is a new write-off. Okay, already there's one in the trial balance. Now we have a new write-off of 1,000. So as this comes in adjustment, it should be in two places. Okay, so we can put it as new irrecoverable debt. But as it's a new irrecoverable debt, okay, we also have to adjust the we also have to adjust the trade receivables. So we already have trade receivables here. We have to adjust that. So already we have 12,200. Now we have to reduce this 1000. So we'll put minus there. So it will get reduced. So have we adjusted in two places? Yes. See, this goes to the SOFP. We have adjusted one. This goes to the SOPL. We have adjusted that also. So 2 times we have adjusted. So we'll move on here. As we are, so next one is bank balance. So bank balance is there. So bank balance amount is 4,150. The next one is capital. So capital, we have to create a another working note, and then we have to work it out. So we'll start. So we'll start. So see, so this is the opening capital. Okay. The next one is capital introduced. Thereafter we have drawings. Okay. With that, I think we can end this working note. Okay. So when we add capital, we will add it, and when drawings is there, we will less it. Okay. So in drawings, we'll put a minus symbol. Okay. So we'll find out the closing capital. So this is the closing capital amount. Okay. So we can take this and put it in the equity side. It's 70,100. We'll check once more. Yes, it's 70,100. We have done that. So we have adjusted the capital. So the next one is discount received. So discount received, where should we put it? We have to check. Okay, it's not mentioning anything about discount received. Okay, so what we'll do is we will take discount received as a cost of sales number. Okay. So discount received is actually an income. All other numbers are expenses here. So discount received, okay, all these numbers are cost. Discount received alone is an income. So we will put a opposite minus symbol here. Okay. As well as for closing stock, we have to put a minus symbol. So discount received is over. So we were now in bank loan. Okay, we have an adjustment there. So first we'll copy that bank loan and we'll put it in the liability side. So here we have, so we have put bank loan. See, bank loan is 10,000. Okay, so we don't need to do anything about that. We just have to put that the bank loan is 10,000. Okay, there we don't have an adjustment, but where we have an adjustment is in the loan interest. Okay, so we'll wait till that. So now we have non-current assets at carrying value of 1,02,500. So the total non-current assets, so we have the non-current asset, so we'll put it that. Okay, we might have some depreciation, so we'll just check that also. So any depreciation, yes, the depreciation charge for the property, plant and equipment has not been yet accounted and it should go to the cost of sales. So that amount is 5,000. So from the SOFP, we will deduct 5,000. So the same 5,000 should also go to the cost of sales. Okay, so it is PPE depreciation. Okay, we have done that. So in two places we have adjusted, one in SOFP and one in SOPL, and so this is over. So we got the loan interest. Okay, so loan interest paid is 300. Okay, and bank loan is 6% loan, which and totally we have got 10,000. So we have a calculation here. So we'll work out a calculation here. So if you take a 6% loan, okay, that leads to an interest of total interest to be paid would be 6% of 10,000 . Okay, and the loan interest that has been paid, okay, loan interest paid is 300. So the balance 300 is unpaid. Okay, so that's the outstanding. Okay, outstanding loan interest. Okay, so if you look at here, this outstanding loan interest, okay, the amount that has not been paid, okay, so this amount should go to the SOFP, okay, as an outstanding amount. So we'll put it here. Outstanding loan interest is 300. And the total interest that has to be paid in this year, okay, total interest to be paid is 600. So this amount should go to the SOPL. Okay, so we'll take this amount and we'll put it in the SOPL. But where in SOPL this should go, that they have not mentioned. So there is a finance cost here separately. So we'll put that as 600. Okay, so we'll take it as loan interest. So it's paid plus outstanding. So that's about this one. So drawings we have already done. Trade payables is 5,600, so that we will take it. So trade payables is 5,600, that we have done. So next is wages. So wages has an adjustment. So what is the adjustment? Wages should be split equally between cost of sales and administrative and expenses. So wages is 15,000. So 15,000 divided by 2 should be shown here. So one part of 7,500 should be here, and the other part of the 7,500, they say it should be in administrative and selling expense. So they say that put it here. So that's about wages. Not much of a difficulty there. And last one is suspense. Suspense is, they say that 8,000 is the income from the sale of the asset. So again we have to create a working note for this too. Okay, so it's PPE. So if you see here, the non-current assets, okay, the PPE balance was 1,02,500. So we'll take that number. And from there we deducted 5,000 as depreciation, okay. So now we have sold an asset, okay, sale of an asset. So the asset worth is 10,000, and we have sold it for 8,000, okay. So the balance 2,000, okay, the balance that is of 2,000, okay, would be recorded as a profit, okay, and the sorry, it's a loss, okay. So loss on sale of an asset. So it was 10,000, it was sold for 8,000 and it was worth 10,000. So 2,000 is a loss. As this is already a cost account, okay, we don't need to put a minus symbol, we can put a plus symbol, okay. So that's about the concept here. We just have to check whether there's any other remaining adjustment. So suspense is like removed, okay. So we have taken 8,000 out of the suspense, okay, because like we have showed that, see, the only thing is 8,000 was like adjusting that, we didn't know what to do, but now we got an idea. The idea is 10,000 of debit, okay, 10,000 worth of asset has been moved, so that is a credit, okay, and 2,000 of it was a loss, so loss is a debit, okay. So credit plus debit, so minus 10,000, so 10,000 and 2,000 comes to 8,000. So this number is properly accounted for, okay. So I think there's no other adjustments here, and we could close it. So we'll close it. Okay, so cost of sales is 70,000. We'll note that. So next one is admin and selling expense. So the total would be okay. This is an expense, this is a new expense, and this is the expense. So that comes to 15,650. Okay, admin and selling expenses 15,650. So that's over. Debtors value. Okay, debtors value has to be adjusted. So the closing trade receivables. Okay, so this is the opening receivables. And this is the closing receivables. So put together it comes to 11,200. So closing receivables is 11,200. So where is receivables? We have it here. The next one is capital. So capital is 70,100. I think we have already posted it. Yes. Still we have interest. I think loan interest we have posted. So only asset value we have to take. So we will take that. So the closing PPE value is 87,500. So we'll take that number and we'll post it on the asset side. So as we have done a working note, we don't need to show again any workings here. Okay, so let's check whether all the numbers are correct. Closing receivables have we posted? Okay, so we have done the sum. Okay, and finally let's check whether it's tallying. So the answer is not tallying. Okay, so if it doesn't tally, don't worry. Okay, we can check it like once more. So first check what's the difference between the two numbers. So the difference between the two numbers is 8,300. Okay, so if you see, I think okay, if you look at the bank balance is not an asset, it's on the credit side. So bank balance is on the credit side, so we could not put the bank balance here. It's actually a bank OD. Okay, it's a bank overdraft, so we have to put that number here. So that is one mistake that we have made. So let's check. Bank overdraft is 400,150. Okay, it's not coming there. So bank overdraft is 4,150. Okay, so now it's like balancing. So if it doesn't balance, just check once like where the numbers could have been wrong. Okay, so how did we find out that the numbers were wrong? See, first we found out the difference See, the difference was 8,300. So try to multiply it by 2. Okay, so that it comes to 16,600. Check whether any number 16,600 is here, or you divide it by 2, and because it might get adjusted here and there. So if you divide it by 2, it comes to 4,150. The only number here in 4,150 is bank balance. So that should be the mistake. Okay, so that's about the sum. So we have neatly finished it off. Okay, you have to do in the same way. You have to like slowly start and create working notes as necessary. Okay, and you have to, one second, we'll just neat it off. So that's about the concept here. You try to work out as slowly as possible, okay, and methodically as possible. So mark the adjustments first and then do the sum. You will be like getting the answer. Hopefully you have understood how to work out a final accounts adjustment problem. So thank you very much. We'll meet in the next video.